What's going on, good people? Welcome back to another episode of the Journey to Get Funded. Today is day number 9. It's October the 4th, 2023. We made some trades today, so let's get into it. So first and foremost, let's talk about the important levels that we have on the charts today. So we have yesterday's closing price right here at 33,212 at the purple line, and that played a very significant role in today's session. So let's go ahead and get straight into it. So let's talk about trade number 1, and let's go back and just look at what was going on during the pre-market hours, because it was very interesting and it's a lesson that I learned a few times and I wanted to talk about it today. And that lesson is not getting married to one specific level on the chart just because you feel like that's where prices are going. And the reason I say that is because we see yesterday's closing price right here in the pre-market. Right now, look at what prices were doing starting around 7 o'clock. We were in an uptrend. We came all the way down from about a low of 181. We broke above yesterday's closing price, finally established a higher low right there, so we can use that as a support level as the market continues to move forward. So everything up at this point in time was just telling me that the bulls were in control, because even though sellers did make lower highs here and there, the lower highs only lasted until the prices got back to where the higher low was established from before. So anytime you see that happening continuously over and over, especially over the course of multiple hours, that just indicates that the bulls are in control at that time period. Now, what made me want to kind of fight that trend at that point in time was this move to the upside that we saw at 8:15. So we came all the way back up to a high of around 297. We sold off, pushed back down to a previous level that was a higher low, found support right there, but created a lower high right here. So let's go ahead. Let's mark that up real quick. So once we had that lower high followed by this lower high right here, I said, okay, I see that the prices are moving lower. We're coming back into a major level of support, but based on the fact that we've had 2 higher lows, I want to short right here in anticipation that the downtrend will continue and then move all the way back down to yesterday's closing price. But the only thing was, you got to respect the higher low that comes right before the short trade that you're trying to take. And the biggest lesson I've learned when I went short right here on trade number 1 was you don't want to short before the higher low gets broken, because see, then you become a trader that's trying to anticipate a move rather than letting the market show you that this is what it wants to do. So don't try and anticipate, just be more so reactionary. And that's one of the biggest lessons I picked up on trade 1. So if you read the notes, it says I shorted here expecting more selling. Always wait for the higher low to be broken before shorting it, and that's very important. Now, I came back on trade 2 on the very next trade, and I got FOMO right here, and I shorted it again. But this is just another example of why patience is so important. And I say I got FOMO because I saw this large move. Well, it doesn't look as large as it did when I was looking at it earlier, but I saw this large candle that came all the way from a high of 259 all the way back down to a low of 238. So I'm like, okay, a 20-point move in a pre-market candle in one candle. I want to go ahead and look for a continuation based off of that move. And that's a cool idea to have, but you still got to wait for that confirmation. And for me, based on the higher low strategy that I'm using, the only way to actually have real confirmation is for prices to break down below this level that acted as the support level for the higher low. Once it breaks down below that level, then I short as prices come back to retest it, because once prices break through that support level, that level now becomes resistance. And you add in the fact that you had lower lows and lower highs as you were moving past that level, it makes sense to go short right there, but only after the level gets broken. And that's the biggest lessons I learned right there on trades 1 and 2. So after that, I was like, okay, I'm trying to force a move that's not there, so let me sit back and see what the market is going to do. So we pushed up, created another higher low. So I circled it up, drew a level of support across it, and we just continued to make higher lows as we pushed all the way back up to retest the ultimate highest point that we made from this swing over here at 8:15 this morning. So once we hit that upper level, we pulled down, created a lower high right here. So let's go ahead, mark that up real quick. And notice how once prices came back up, after they bounced off of this higher low support level, they came back up to retest this lower high, but they were never able to break past it. Now, anytime you see that, that indicates that the sellers are definitely in control at that moment. And if you think about it, it's kind of the opposite of what we see when we're using the higher low strategy. So when we use the higher low strategy, you wait for a higher low to get established, right? You circle it up and you draw a level of support across it. Now, if the buyers are strong in that point in time, at that point in the market, they'll come back to that level but respect it. So we pretty much hold on. So we pretty much saw the opposite thing happen towards the upside just on the way down. So this is an example of when a lower high comes back to get retested but never gets broken through, and that tells you that the sellers are in control at that point in time. So once we have that retest, we see prices push back down past the previous level of support from a higher low that came a little bit earlier, pushed back down to the bottom of another higher low from earlier in the upswing, and then push back up to retest resistance. So once I saw this, hold on, let me go back to the notes. All right, so for trade 3, I shorted right here once I saw the lower highs at C and the lower high at D. So anytime I see 2 consecutive lower highs, I'm like, okay, the selling is definitely established, so let me start looking for my short trades, which is a great idea to have. But as the notes continue to say, I still have to short from higher prices though, even though I see the idea that I want. And that's kind of the problem I've been running into so far this week, is that I've been having a good vision about where the market is going to go, but I haven't been entering at the exact perfect levels that I should be. And trade number 3 is an example of that. Because we see me going short again towards the lows of the swing, and that's just not the best idea when you're looking for the short trade, because more than likely prices will come back to a major level of resistance above, and then the sell-off will continue. So if I would have shorted on trade 3 from the same place that my stop was at, I would have been able to catch trade 3 from the upper levels of resistance up here at around 265, and then take it back down to yesterday's closing price around 212. So I would have been able to bank in the profits that I made from 4, and then take back the losses that I made on 3 and turn that into a little bit of extra profit. So even though I came out net positive throughout these 4 trades that I made in the pre-market, I did it in the hardest possible way, and I feel as though it was better ways for me to do this. So it's not always about coming out on a positive side, but it's about how you do it. So it's important for me to just be a little bit more patient when I have my ideas and wait for the market to confirm the idea that I'm looking at right then and there. So after trade 3 got stopped out, we see prices actually finally break past the level of support that the higher low was actually giving out. So that's exactly what I was looking for, and then that's when the trade started to work. So if we read the notes for trade 4, it says the idea from 1 to 3, from trades 1 through 3, began to work once I waited for the higher low to be broken through, and then I took this back down to yesterday's closing price. So that right there, those 4 trades are a perfect example of the right way to do things and the wrong way to do things. If you try and get in front of the market and anticipate something happening before it actually occurs, you just open yourself up to a lot more risk, because anything could happen at that time. So you always want to make sure that you wait for those confirmation signals, and then once you get those and those confirmation signals can line up with your ideas, that's when you want to start looking for whatever trade you're trying to get into. So that's really the biggest lessons I learned right there through trades 1 and 4. So after that, we see the market open at 9:30, and we pretty much played around a lot. It was not, I wouldn't say it was very well defined price action. Prices were kind of all over the place, back and forth, and that's one of the main reasons I don't trade within the first maybe 7 to 10 minutes after the market opens, because it's a lot of volatility that comes in almost every day at that time period. And I think it's better for me as a trader to just wait until I see a more defined price action pattern, and then that's when I want to start to look to enter into my trades and either go long or go short. So right here, when the market opened, we just kind of established a very large range between, let's go ahead and go to the live chart. We established a live a large range between 267 and yesterday's closing price at 212. So we pretty much just pushed back and forth between these levels, and then eventually we were able to actually break down past yesterday's closing price and establish a low back down from where we created this initial lowest candle wick when the market opened at 9:30 down here at 191. So I basically just took the lower levels of resistance from this previous swing during the pre-market, combined with the lower prices for this wick when the market first opened, and then I drew a zone in between those levels and then look to use that as a place to go short from if the market ever came back up into those levels. So as soon as we broke past yesterday's closing price, we came back down, retested the bottom of the zone, shot past it a little bit, created a new low for the day, came all the way back up, retested the top of the zone. I thought about shorting right here, but one thing about my strategy is that I prefer to not go against momentum. So even though I saw prices coming back up to retest the previous low, I just didn't like the fact that this candle was, so it opened at 175 and the high was 206. So that's about a 31 point move in one candle, and I do not want to get in front of that buying momentum and just try and short it right here, especially when we see the fact that we have yesterday's closing price a little bit higher up. That could act as a magnet that pushes prices up to that level, and my stop would probably be maybe, so if I got short at 206, my stop would be at 220. So prices could easily continue moving up on a momentum candle like this, and maybe even come up to a level like this one at 226. So I declined the short offer right there. I'm like, look, let me just wait for a better opportunity. So I see prices continue to push down. They created a new low, but they only wicked down there to create that low, and they closed at the pretty much the same level that they closed at the last time they came back down to this swing. So that right there is more of a double bottom type of formation, and even though the downtrend was a little bit strong at that point, you still don't want to ignore the fact that a double bottom got formed. So I was like, okay, let me just hold out on the short trades and see what the market wants to do. So we eventually pushed up to yesterday's closing price, pulled back a little bit on this candle, and I thought that this was a higher low, but I wasn't quite sure, so I didn't mark it up. And I think I made the right decision at that time, because sometimes in the market, you want to make sure that the higher low is clearly obvious, so that way everybody in the market can see it, and you'll have a better chance of a reaction happening around it because everybody is keying in on that one level. Because if you're the only one that sees it, then it doesn't mean that it won't work, but it just means that it's not enough people looking at it in order for it to be significant. So I think I did a good job by not considering this a higher low. Then we see prices push all the way back up, past the zone, past yesterday's closing price, back up to retest this previous higher low. So we came all the way back up to these wicks, but didn't get there quite exactly. And that's a pretty strong sign for the sellers in the market, because remember what I told you about momentum. We saw the momentum first come in on this first green candle, and then we saw it come back in once again as prices moved past that level, past the zone, past yesterday's closing price. So they had enough momentum to move from a low of 161 to a high of 239 within the span of, that's what, 951 to 955. So in the span of 4 minutes, they moved up by about 60 points. But with all of that momentum that they had, they still were not able to get past these wicks that were up here, which tells us that even though it was a whole lot of buying going on, it was even more selling that came in to absorb that buying and make prices reverse right here after they created a lower high at this swing point. So let's go ahead and mark that up. So that right there is definitely a very bearish sign in the market. And then from that point forward, we see prices shoot all the way back down, back to the bottom of the zone once again. And then we had news come out at 10 o'clock. I forget what it was, but we can go ahead and check it out. So let's see that real quick. Today is the 4th, right? Yes, so we had ISM Services PMI, and that is the level of a diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. Now, I'm not even going to try and pretend like I know what that means, but because it's a red event, that means that it is important, and we can verify that it is important based on the reaction that we saw when the market actually received that news at 10 o'clock. So after we came back down to the bottom of the zone, the news came out, we spiked all the way back up to this previous swing high. Well, yeah, swing high that we created, which is also a lower high. But notice how this wick, very similar to what these wicks did before in comparison to this previous lower high, these wicks were not able to reach the highest point that this previous swing high did. So that just confirms to us that the bearish momentum that we were seeing earlier is still present in the market. So off of that one candle, we pushed all the way back up here, ended up closing below the zone and actually violating this higher low that got established right here. So once I saw that higher low get broken through, I saw the fact that we had multiple lower highs coming up into that level before, so that confirmed to me that it is okay to start looking for my short trades. So therefore I started to just figure out what was the lowest price for this candle. So the low right here was 185. So I want to put my order anywhere between 2 to 3 ticks away from that level. So I would say anywhere from 182 to 183, maybe 184 is really my ideal place to get in if I'm looking for the short trade right here. So I put a short entry in at 183, took it back down to my scalp target 20 points below at 161, which also lined up with the previous area where we established the lowest price for the day up until that point. And then I felt like that was a good area for me to get out, and I called it a day after that because I felt like I came in the pre-market and just kind of rushed it a little bit. I felt like I maybe could trade for the rest of the session, but one thing that I've been learning is that you got to understand your mental makeup as a trader on a day-to-day basis. It'll be some days where you come out and you just on fire, you're making good trades, and you feel like mentally that you can keep going and keep doing the right things. But today, I don't know what it was. I wouldn't say I felt bad about my decision making, but I just felt like if I'm ahead right now, let me lock that in and then come back tomorrow with a better mindset and more motivation and more focus, because I feel like these 3 trades that I took a little bit earlier today, the first 3 were just not my style, and I was forcing things. So I said, you know what, if that's the type of mindset I'm in today and I'm up, I made profit, let me just lock that in. So I decided to call it a day, and I did fairly well, made 388 on this account. So if we divide that by the number of points I was trading 4 contracts, so that's $20 a point. So that's about 19 points. So definitely not my best day, but not my worst. Good profit, locked it in, came in, handled my business. So definitely got a lot of things to work on in the back testing session tonight. I need to work on coming into the session and being more patient, and going back to that idea that we talked about earlier, which is having a good mindset about where prices are going to go, but still waiting for the market to give you confirmation. That's one of the biggest things I need to focus on, because today I was able to luckily bounce back from making those bad decisions. But it's never guaranteed that you can bounce back on other days. So it's important to not even go down that road and just to stay on the right path. So that's really what I need to focus on. And if I get that right, I feel like I should be able to come back tomorrow and have a pretty good day. So I appreciate you guys for tuning in with me today. I hope you learned a lot about having a good idea about the market, but still waiting for the market to give you confirmation before you get in, because I definitely learned a lot about that today as well. So I'll be back tomorrow on October 5th, 2023, ready to run it back with you guys again. But until then, study hard and take it easy.